Welcome back to Alpha Recap, folks, your quick, no-nonsense wrap of today's market moves. We're coming at you after the close with the headlines that mattered, and, as always, if you have questions, you can reach us at stockalpha.ai.
Good to be here. Markets closed mixed today, and there was a real tension between the long-term AI and chip story and a bunch of near-term tactical noise.
Yeah, a classic day where the theme and the tempo didn't exactly sing in harmony. So, what really stands out here is how the chip cycle and AI demand kept getting mentioned as the structural backdrop, while earnings and corporate moves created crosswinds.
Right. On the bullish side, you had big thesis calls, like a high-profile bank putting in about 40% upside on the hottest market, and the continued narrative that Taiwan semiconductor manufacturing is basically the hardware backbone for AI compute.
And yet the day wasn't a clean by-the-news parade. Broadcom missed on fiscal second quarter revenue, and that rippled through supplier sentiment. Not great for component names.
Nope. And then you had a weird twist. Some companies that beat expectations still saw their shares sold into. Palo Alto Networks was the poster child. Numbers beat, but the stock finished down as traders digested profit-taking and, importantly, questions about when AI revenue will actually show up in the books.
Let's pause on that for a second, because it's a key nuance. Earnings beats don't automatically equate to bullish price action anymore. Investors are asking whether revenue is recurring, near-term, and gap recognized, or whether it's tied to early-stage AI projects that'll be lumpy and delayed.
Exactly. I mean, when you step back and look at this, it's a maturity story in the market. The narrative trades used to be simpler. Now, folks are differentiating between recurring software revenue and nascent AI monetization that might not land cleanly on a quarterly P&L.
And there were some high-profile corporate moves too. Alphabet surprised people with a larger capital raise, in part to blunt demand for big AI-related initial public offerings like OpenAI or Anthropic. That's a reminder that balance sheet decisions can change supply dynamics even without touching operating results.
Yep, and then you had headline grabbers in the market structure world. Marvell got reclassified into the S&P 500 and jumped. Intraday, it was up about 6% to roughly $208.26, and that pushed its market cap toward about $269 billion.
That reclassification effect is always fun to watch. Index flows can make or break a day for a name, independent of the underlying fundamentals.
And retail had its own bright spot. Macy's reported its strongest first quarter in 4 years and raised guidance, which gave the consumer patch a little bounce.
Let's dig into the themes. The first big one was AI and the chip cycle remain the structural backdrop, but timing matters. Goldman and others argued there's still sizable upside if AI demand keeps ramping, but the Broadcom miss reminded everyone demand is uneven across connectivity and infrastructure.
Right, and that's the heart of the debate. Optimists point to earnings momentum and node migration as reasons to stay long the cycle. Skeptics point to misses like Broadcom as a caution that end market ordering can surprise to the downside. So you can have secular tailwinds and cyclical hiccups at the same time.
The second theme is earnings beats aren't an automatic cure-all. Palo Alto Networks cited valuation anchors. Analysts referenced numbers like about $235 and about $281.69. But the stock still sold off because of uncertainty on AI revenue timing and reporting cadence changes.
Yeah, that tracks. Some desks are marking down immediate expectations when management says AI revenue will be lumpy. Quant models don't love ambiguity. Plus, discretionary traders will take profits if the story's already run a long way.
Third theme. Leadership is divergent. Growth versus income. You have strategists pointing to dot-com parallels and highlighting buy-rated dividend ideas. Some investors rotated into yield names while others kept piling into AI-exposed growth.
And that rotation shows up in stories like Packaging Corp getting coverage as a dividend play. Analysts note that if yields stay elevated or if tech multiples compress, cash flow-focused names look more appealing to certain investors.
Fourth theme, and an important one. Corporate balance sheet actions and IPO dynamics matter. Alphabet's move was tactical. Raising capital to blunt demand for hot AI IPOs changes where capital flows, even if it doesn't affect near-term operating performance.
It's a neat example of how big companies can influence the market beyond their reported revenues and earnings. Supply and demand in financing can alter valuations in private and public markets.
Okay, moving into some deeper context on a few of these major moves.
Start with Broadcom. A fiscal second quarter revenue miss matters because Broadcom sits at the crossroads of infrastructure, silicon, and connectivity. When a company like that flags a miss, it forces model revisions across suppliers and OEMs.
Right, and Broadcom's miss creates a near-term tightening of estimates, even if the long-term AI compute story remains intact. It's a reminder that the supply chain is layered and demand isn't uniform.
TSMC's role is the other side of the coin. Its foundry scale for advanced nodes makes it a leverage point for AI compute. Analysts framed TSMC as central, both for growth and, for some investors, income if capital returns become part of the thesis.
And then Marvell. Beyond the index flows, the inclusion into the S&P shifts demand from passive funds and changes how the stock is compared to legacy telco names. Those re-rating mechanics can be powerful.
Palo Alto Networks deserves another call-out. The sell-off after a beat was driven by three main things: profit-taking after a big run, uncertainty on when AI revenue appears in GAAP results, and reporting changes that complicate quarter-to-quarter comparisons.
Which brings us to an important explainer for listeners: revenue recognition and reporting cadence. In plain English, companies might be doing AI work today, but how and when they can book that as recurring revenue depends on contracts, deliverables, and accounting rules. That can make it lumpy and hard to compare quarter to quarter.
Exactly. Some AI sales are one-off professional services. Others are subscription-based and predictable. Analysts and portfolio managers are trying to separate the two when they value a company.
Switching gears, consumer. Macy's put up its best first quarter in 4 years and raised guidance, which is a reminder that operational fixes like store rationalization can pay off. It's a selective bright spot in a consumer narrative that's often painted as broadly weak.
Short reactions. Big move. Not what anyone expected.
Let's run through what this means for different investor types. First, long-term allocators. Analysts note the secular AI compute case still looks intact, and exposure to foundries like TSMC can capture long-run productivity gains. But watch out for near-term dispersion. A single supplier miss can shift sector returns.
Active traders and momentum players. Today was fertile ground. Earnings volatility and index-driven re-ratings create tradable setups, but also fast reversals. So liquidity and timing matter a lot here.
Income and value-oriented investors. There was a renewed push into dividend ideas. Strategists pointed to opportunities in cash flow-driven names as a counterpoint to stretched tech valuations.
Sector specialists. The data is mixed. Strong secular demand for AI compute exists, but supply-side signals like CapEx cadence and node migration timing are things to monitor closely.
And retail-focused investors got a data point in Macy's. Operational execution mattered. Store portfolio optimization showed up in the numbers and raised guidance.
So what should listeners be watching next? Quick list. Follow the next quarters for Broadcom and other infrastructure suppliers for signs of inventory digestion or restocking. Monitor security and software vendor commentary on AI revenue recognition. Keep an eye on TSMC and foundry peers for capacity and CapEx signals. And watch macro cues, rates, and inflation prints, because valuation and yield dynamics will affect rotation into income names.
Also watch corporate capital actions and the IPO calendar. Alphabet move showed those can reshape private-public capital flows. And for market structure watchers, a note in the coverage showed multi-list options average daily volume was up almost 24% year-to-date, which affects how fast stocks can move on flows.
Bottom line takeaways. Structural secular stories in AI and chips remain, but they coexist with near-term execution and timing risks. Analysts note momentum and index flows can re-rate names quickly, while individual prints and corporate moves create transient dispersion.
So the measured conclusion is, separate long-run opportunity from near-term timing risk. Think in terms of time horizon, liquidity needs, and risk tolerance when interpreting these developments.
Honestly, I was a bit surprised by how much selling followed some beats. It's a clear signal that narrative risk and reporting mechanics are front of mind for market participants right now.
Yeah. To repeat a refrain, earnings beats are necessary but not sufficient. Timing, recognition, and who's buying or selling post-print matter just as much.
Quick reactions. Right. Good point.
All right, that's our wrap. If you want a short list of things to check tomorrow, follow any guidance revisions from infrastructure suppliers, read management commentary on AI revenue recognition, and watch TSMC's comments for CapEx and node timing.
And remember, this is informational analysis only. Analysts note the data suggests persistent secular drivers and meaningful near-term risks. This isn't personalized investment advice, and it's not a recommendation to buy, sell, or hold anything.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Bye for now. We'll be back after the next close with more recap and analysis.